Good evening and welcome to today's video. Now in today's video we'll be looking at three equities. All the three equities we are looking at are at approaching a point at which there will be either a reversal to the upside or a further breakdown, or are already at the point where there can be a reversal or a further breakdown. Now the equities I'm looking at is first going to be Sterling and Wilson Solar, then is Tata Consultancy Services, third is ICICI Bank. Now these three equities I'm looking at as it's part of the list which people are recommended of what they want to see, and these three are the ones that are approaching a juncture at which there can be some new movement. So now the first stock we're looking at is Sterling and Wilson Solar. Now when we look at Sterling and Wilson Solar, Sterling and Wilson Solar is basically it is approaching a key support zone, and on Friday it managed to on Thursday and Friday it managed to stop the descent. However, the candle pattern did not form properly as expected, and the main issue Sterling and Wilson Solar is facing is that the 50-day moving average as a resistance right above. So now how I would watch Sterling and Wilson Solar is that basically if we take, let's say, this line, provided we maintain this low, let's change the color so it doesn't confuse people. Provided, let's say, we maintain the low of last week, which is 314.15, then we can trade within this range. But within this range, I wouldn't advise anyone to go long, as number one, there is the 50-day moving average resistance, and there is also a quant resistance at 346. However, if it breaks these two ranges, then it will have a rise up to 380. On the other side, if it breaks the low of this week, 314, then it will fall to the quant support zone at 297.40, which is also a candle support zone. And if you look at it, it is a candle support zone in 0.1, 0.2, and also when we look at it, it is a change of polarity zone where former resistance came new support. So this is going to be a very important line, 297.40. If it breaches this and you're holding this stock, because since this stock was actually recommended to me by three people to look at, so let's say those guys are holding the stock, if it breaks 297.40, then it's going to go straight in for a toss to 260, which is another quant support zone, which is also matching with a candle support zone which caused the major reversal in the stock. If it breaks 260, then 216. The only good thing I see about Sterling and Wilson Solar is that for the past 4 months it has managed to stay above the 20-day moving average on the monthly chart. So it will be very important for this stock to continue staying above this. Provided it stays above this, it is safe. However, the day it breaks 297.40 is the day also it will break this 20-day moving average line, plus it will have broken also monthly support when I look at it now, because this monthly support is at 292.90, the simple monthly support, not the quant support. So it will have broken quite a good range, and that would open a clear downside to 260 to 216. So my final thing, do not trade this as long as it is between 297 and 347. However, if it breaks any of these ends, then it is a trade. I know the 2200 are here, but that usually the quant support is above that, we usually test it, and the 200 day will basically, it will test it, form a wick there, and then come and close at the 200 day. Now this next one we're looking at is Tata Consultancy Services. Now Tata Consultancy, I like the chart for only one reason. Again, this is the same as Sterling and Wilson Solar in one way, is that we had a change of polarity zone, which is a pattern which I like when I see it. Because if you see the support at 3,341, that was former resistance. It was tested once, twice, thrice, fourth time, fifth time, and on the fifth attempt is when it breached and formed a new upper zone. Now when we look at basically the stock, it has been trading within this upper zone from quite some time. You can take it as this upper zone from basically 11th August 2021. So it's been trading within this zone the whole time and dilly-dallying, forming nice basically waves on it. So now how I will be looking at Tata Consultancy Services is it is very important for it to hold the support at 3341. If it breaks that support, then the next support zone is 3270, which is also a very important support zone, but not a change of polarity zone. So 3341 holds more weightage than 3270. However, if it breaks this zone of 3270 to 3341, then it will have entered a bearish structure on the longer time frames. We're now going to weekly and monthly. Weekly is already bearish, but I mean mainly on the monthly. It will have opened a new trend to the downside. So it is very important for Tata Consultancy to hold the support at 3341 and at 3270 for any up move to occur. Now, if it keeps holding this and it breaks the 3480 basically resistance, then it can go towards 3580 with a 20-day moving average providing some problem on the upside. And another good factor I see also with Tata Consultancy is still above this 20-day moving average on the monthly chart. The 20-day moving average is at 3323, which is a few points below 3341. So you see how important that zone is. Now, how I will trade Tata Consultancy is it is a narrow range, and if you do an option buy, you're going to get killed by basically the dilly-dallying which goes around. It will be volatile in this area. It will just decay the living daylights out of your option. So if we manage to stay above this zone, then we can sell the puts which are below here, and we can also sell the calls which are above here, because provided we do not break this zone, then that can be the possibility with Tata Consultancy. But let's say if I have to sell calls, I will use basically the 20-day moving average as a guidance, and I will sell calls, let's say above 3,530 and 3,580, because it can breach this and go till there. On the downside, I will basically be looking out to sell below 3270. Now, why I won't sell 3341 as it is within that range? I do not want to constantly seeing my MTM fluctuating like nuts. I would rather have that peace of mind that basically that's the way I would trade it. I wouldn't trade it right now as an option buy because of just simply it is within the range, and there the decay will be absolutely brutal. So that basically that is for Tata Consultancy, but it's a chart that is looking good. It looks like it wants to stabilize. The third one is now ICICI Bank. ICICI Bank has got battered, and in fact I don't mind saying, but I got stopped out at this point at 704 as I had gone long at roughly the 715 resistance zone, and I got stopped out at 704 in the normal equity, on the normal equity side, in my account and two other accounts I'm handling. So now that is where I got stopped out, as it was looking like it will give a short move up to the upside, but that failed. Now when we look at ICICI Bank, the main problem is the 50-day moving average. Now the 50-day moving average is been a constant resistance, and if we look at it, we have come quite far away from the thing. So now it will be very important for us to hold the support zones at 665 and 653. I say this as so the support zone is, if we break the support zone between 653 and 665, then it will open ICICI Bank to a decline up to 580. Now I'm not saying the decline, if it breaks this, it will go straight like this. Nope. If it breaks this support zone, then it will be a gradual decline over time, but then I will heavily be selling calls and letting it go down by getting buried. Now I wouldn't recommend anyone to buy ICICI Bank as of now for only one reason. Yes, we can get a dead cat bounce, but remember that's going to be a dead cat bounce. So if we have a bounce around here, we may go to test 715. That will be just a short-term swing you can take. But if most people will want to add it as a medium-term trade, and that is not advisable, as once we go back up here we're going to meet so much resistance and we're going to get smashed back down to this. The overall trend on ICICI Bank is to the downside, and it will be very important for it to hold this zone. But if it breaks that, I do not advise any equity buy in this stock owing to the problem it is in. Plus we can see for Thursday also the 20-day moving average slipped below the 20-day moving average on the daily chart. So now those who watch my pre-market will know that usually causes a bit of a upward move to come to trap some new guys and bring them down. So that is what I expect with ICICI. Any up move to 715 and 754 can be traded as a very short-term trade, let's say 1 to 2 days, after which you better get out because you're going to come back down towards this side, as it is bearish, and also the banking sector is performing extremely poorly, and it's going to be one of the sectors that's going to continue getting bashed as the interest rates hike across the world. So it's better not to hold it as of now until the whole drama ends, or it forms a very good pattern around here. Thank you for watching, and if you do like the video, then like it below, and also do subscribe to the channel, and do share it with people who are interested in the stocks. Thanks.